Hi friends, let's take a look at Ethereum together. Yep, that looks like a mess on the chart. Going to get rid of it. Oops, sorry. So to people who are just tuning in for the first time, I'm Rocky Outcrop. This is the Rocky Outcrop channel, and we do daily technical analysis. And I put a lot of effort in actually to being sort of trying to be friendly, smiley, make jokes and all the rest of it, and be entertaining at the same time as being real, genuine traders trading for actually trading for a living and stuff like that. Try and combine it together, and it takes a lot of effort. It takes a lot of effort to keep all that enthusiasm going all the time. And in today's episodes, I decided earlier on that I would just be a bit more grounded, really, just try and be more grounded. Now, this is also taking a lot of effort to do as well, but I'm just sort of expressing the inner trader. We've got the 1 hour chart on here. You can see that we've had a death cross on the 1 hour chart. How meaningful is that? Not particularly, but it's there. You can see on the 4 hour chart that we had a golden cross back over here, and we're still living under golden cross conditions. You can see on the 24 hour chart here that we've got a death cross back here in the start of April, and we've got this sort of more or less quite, it's fair to say, dramatic turnaround in the trajectory of the 50 simple moving average, and it's quite fair to think that in the next wee while, providing there's not catastrophic downturn in the prices, that you get some sort of cross happening over here. Whether it's that exact angle or not is completely besides the point. And the one thing I suppose that I've been pointing out to people recently, in terms of just what I'm looking at with Ethereum prices, is that we've got this here, which is essentially a rising wedge. The chart currently, by the way, is on linear if you're interested. There's this fake out area at the top of it. We've come right back into the wedge here. We've gone down to the 193 area. Should we not see the prices actually get supported here, then we'd be breaking out of this wedge, and by doing so, it'd be a bit more bearish than it otherwise would have been. And we could see these things get a golden cross soon. And if they did get a golden cross soon, then for the price action to come down and revisit and test off of one of these two moving averages, the white one there, which is a dotted line, but I've zoomed out so it's hard to see it's dotted. And this red one here, when they cross, it's the likelihood of one of those moving averages being tested in the following, in the sort of the period following the cross. They crossed here around about the 14th of February, and they were tested there. A couple of weeks later or whatever, 3 weeks later, they got tested off of them. Got crossed here September. Let's say the start of September, got tests of the then there. A couple of weeks later, tested them both, really over the period of the next 2 to 3 weeks. And over here on the 19th of April, you could see that, a couple of weeks later, or whatever, a week, 2 weeks later, whatever, they get retests. Retests happen after or whatever of the, people call it back testing. I don't like using the word back testing because it's not an invalid term. People do it. They say like this gets back tested or whatever. It's a retest of an average or whatever, a test, just a test. People like to talk about it as being back test. And the reason I don't like back testing is because if you get a strategy, is if to say, if I make a hypothesis like, when a golden cross or a death cross happens, generally speaking, one of those two moving averages will get tested within a couple of weeks afterwards. That's my hypothesis. Then I can back test it by looking at historical information. So this is me back testing, and just from the world of science and just whatever, just in general life, back test to me always means looking at historical data. So I don't think it doesn't make the semantics don't add up for me really. And I've often talk about this on the channel, how the taxonomy in trading is doesn't make sense. But I wouldn't say it's some future event that we could go and back test this thing as a future event. Especially not after having spent the years between working at the investment bank and then going back to trading there afterwards, becoming a sort of software engineer, you could say, and that sort of, it just doesn't work for me. But anyway, that's the concept. Could we be doing that? Have we got a wedge on the go here? The levels I'm curious about in terms of the initial first one being held is the 193, where we see the 21 EMA on a daily basis, on a daily time frame there, and then afterwards 185 if we're looking at fake outs. The sort of pivot, you could say the market then could potentially be in here at 177. Makes a lot of sense that the pivot would be in the market, in a market, would be in around there, given the structure of this upward movement and its wedginess, and given the fact that this horizontal's in there, and given the fact that as we go along here, we could see a retest of these things. There's a confluence of ideas in around there. Of course, we could see all of that being negated, and the first area that I'd be looking to see it being negated is, of course, the price is coming back up there and being able to actually do something on a decent enough time frame above $215. And of course, then profit taking lines at 220, well discussed in the past. We talked about them an awful lot of times. Greedy people can look towards 225 and 230 in terms of their profit taking, but I'm not actually going to get sort of even more bullish on this, given the way that this is all shaping up currently until we're above 230. And this is just this general area where there's going to be a lot of questions being asked. And as you can see, looking at the VPVR, just drag it back out. Now look, bearing in mind that's 2019 over there, so we've got like enough price action on here to be able to make some sort of assessments off of this sort of thing. You can see that that the last, in terms of, like, this is the BitMEX chart, right? So the BitMEX started listing the Ethereum perpetual contract over there on the 3rd of August 2018. So since then, this area here where we're at in and around the $200 area is one of those key areas where, and then after that the trading activity has dropped off. So breaking into the 230 does become quite sort of crucial in terms of the bullish case scenario and all the rest of it as we look towards the top side. Pardon me. And in terms of previous supply and demand, vast majority of it's below where we are right now, and we'll come back in and recheck on this later. Now, I've deliberately been very somber in today's episode. This has taken a lot of effort, but equally it takes a lot of effort to be enthusiastic and upbeat and fun in every episode. Probably more effort, to be honest with you, but I like to do that because we're all pals, and it's great fun, and we're checking in with each other and saying hi, and it's like we want to have a laugh and it to be fun and entertainment, and not just pure work. So I like to do that, and of course I like to be friends with each other during this stuff. That might be more accurate for people. This could be a little bit just, this was just a sort of retest of that Fibonacci and whatnot, at that particular time, I think, quite likely. So anyway, just as a sort of throwing that out there, like I say, make these things for traders. If you get confused as I say things like this, it's because you're not really a professional trader. But anyway, and that's cool, by the way. It's totally cool because you will be at one point. Just keep watching along. You're welcome. You're part of the family, and we love and respect you. So don't worry about that. But anyway, I'll go back to being my sort of putting that effort in to be enthusiastic and all the rest of it tomorrow. Today, I'm deliberately trying to give across an attitude of, like, this is what the inner voice needs to be when you're doing trading. It needs to be FOMO free, greed free, fear free, and all the rest of it. And that's how you have to think about things. This price action, I could have talked about this price action here as well, just in this episode. I've not done it today. I did it yesterday and all the rest of it, so you can look at that yourself. Essentially, if you're wanting to have one takeaway and you feel like I've wasted your time, this area here needs to be maintained. But like I've said so many billions of times, $200 itself speaks for itself. So there was me speaking for it. I'll catch you next time. Thanks so much for tuning in. Share this video with a friend if you've got one that you think would like it, and check out all my previous videos to see how it's usually done anyway, and all that sort of stuff. And of course, to all the Rocky Outcrop, which is absolutely fine, by the way. I'm just doing this because, like, on the one hand, it helps me avoid burnout, with that sort of constant enthusiasm when we're looking at the same data every day. And also, I just wanted to send out a really clear message to people about the attitude you need to have when you're trading. You're not a robot. You've got emotions and everything else, but you have to counteract them. And this, I think, is, at least, is my sort of way to do that. I'll catch you in the next episode. I really appreciate you tuning in. Thanks very much. Help grow the channel. It'll be really appreciated in the long term by everybody, I'm sure. And welcome to the family if you're new here, and join the Discord and all that stuff. And I'll catch you in the next episode.